So, Dan, let's just start here. The yield pressure. 20-year hitting over 5%, but I think the real thing that we're looking at right now is the 10-year at about 4.75%, putting a lot of pressure on tech on top of a rising dollar. How do tech stocks move higher with this setup?
Yeah, I think there's two things playing out. I mean, one, fundamentally, in terms of AI, CapEx, use cases, what we're seeing strong on the enterprise was on the consumer side, that's actually better than expected. And I think we'll see that over the next month in terms of earnings. Now, clearly, look, we've gone through this the last few years. In terms of the 10-year bond risk-off, we're going to have these moments. But our view is these are the opportunities to own the winners. And as the fundamental cases play through, look, Frank, I only think we're halfway through this tech bull market.
All right, we're only halfway through. I do want to talk to you about Palantir. That's one of your top 10 picks. Under pressure once again. We've seen, after it was the best performing stock in the S&P last year, we continue to see a sell-off and the stock be under pressure. Are you concerned about the valuation like so many other people say they are? They just believe the valuation is too high, and it would be very difficult for the company to live up to the lofty valuation.
Yeah, I think if you just stick with valuation, you've missed every transformational tech name the last 20 years. I think Palantir, I continue to view as that's the next Oracle, the next Salesforce. When I look at AI revolution, and look, let's talk about numbers. $2 trillion of AI CapEx next 3 years. And I think where Carp and Palantir position, as it plays out, we're going to have these sort of white knuckle periods. But ultimately, I think this could be a 3-digit stock as it plays out. But these are the times that you ultimately look at the winners and how to own them.
All right. So you and I have talked about this before, the rise in the dollar. I'm looking at a one-week chart of the dollar. It's up about 1.5%. These are tremendous moves when it comes to a currency. We did get a spike after the jobs report, but still, it was still moving higher last week overall. I know you're bullish on tech. You're always bullish, just to be fair. You gave us your top 10. Out of these top 10, which do you see as being the most likely to be impacted by this rise in the dollar due to their revenues coming from overseas?
Sure, Microsoft, Oracle, probably 1 and 2 in terms of ones that are exposed. I mean, Apple clearly will also have some headwind. Now, look, I think the street is already factoring in some of that in terms of estimates. I don't think this becomes that dramatic if, ultimately, if we actually start to see this curtail. But it just comes down to, Frank, I think we sit here a month from now, it's a much different picture because of the fundamental picture right now that plays out in tech, as this actually is seeing strength being led by the AI revolution.
Okay. But we have seen a lot of weakness in tech, Dan. Let's just be fair. We were just showing a chart from Mike Santoli's column over the weekend showing the current bull market and the average bull market. If you look at the average bull market, this bull market has a lot more to go, but it seems like tech, it doesn't seem like it, just due to the concentration, tech has to be the engine moving it forward. So if we go to the next Fed meeting coming up later this month and the Fed continues to be hawkish, do you see that continuing to impact the tech trade? Because that seems to be the inflection point, even for the tech trade, even though we call these stocks defensive just because of their bulletproof cash holdings and everything else.
Yeah, look, and that's also why you have a diversified view in terms of whether it's an Oracle, whether it's Microsoft, and some of the more high-growth names like a Palantir, Tesla, and others. Look, it's going to be a headwind, but our playbook the last few years has been you use these opportunities to own the winners. And that's why I get the bears are going to come out. Right now, the bond market, the 10-year is going to ultimately dominate. But we're only halfway through tech bull market. And that's why I still believe tech stocks are up 25% this year. We look back at this as an opportunity, not time to hit the elevator and ultimately hit the exit.
So it's not just about fundamentals, it's also about sentiment. Sentiment's a big driver in the market. Which one of these earnings reports do you think we need to watch to look at sentiment? Which one's going to tell us really where the tech trade is as far as the investor sense of their confidence in the bull market going forward, their confidence in this AI trade?
Yeah, I think Microsoft, because I think as long with NVIDIA, those are probably the best in terms of barometers for what we're seeing with AI, and ultimately that's the stock that's also been under pressure. And then ultimately you look at Apple, because Apple right now, whether it's Zuck, whether it's some of the downgrades, a lot of pressure in terms of showing what we're going to see, specifically coming out of China in terms of demand.
You mentioned Zuck. We do have a soundbite we want to play from Zuck on the Joe Rogan podcast talking about Apple. We're going to play it. I want to get your take.
Great.
Just because they've been so off their game in terms of not really releasing many innovative things, that eventually, I mean, the good news about the tech industry is it's just super dynamic and things are constantly getting invented. And I think companies, if you just don't do a good job for like 10 years, eventually you're just going to get beat by someone.
All right, your take, kind of an aggressive take from Mark Zuckerberg. Ever since he started those MMA classes, it seems like he's just a different guy. He's got a chain on, it's a different thing. But in all seriousness, do you think he actually has a point about Apple and their innovation?
Look, it's an MMA battle with Cook and Apple, and because it comes down to 30% in terms of, with the commission, what they're taking. And we're seeing this sort of Game of Thrones play out between Meta, Apple, and I think across the rest of tech because of where we're going into it. It's frustration from Meta's perspective. But look, for Apple, as we've talked about, this is the year they have to ultimately not just innovate, but show the consumer AI revolution does go through Apple. And I think Zuckerberg recognized that.